Welcome to the Indices, and here we're looking at the 10-year notes, and just to point out, because we've been observing them, is that the move above the 125 would place pressure on the S&P 500 or stock as such, and this particular move here appears to have more to go, and also in the bigger picture as well, it's got more to go to the upside. So there's still going to be a lot of pressure on stock, on the S&P 500, and in the bigger picture for this too, we can see it moving up to the 127, by the way, but I won't go into that right now. But just for the short term, it's pushing high there. The other thing too is the yields as well for the US as well. So normally when I can just bring this is a daily chart, this one here, and this, normally when the yields are moving down here, then the stock market will be moving with it. So, we've seen this move down through here, and all this being corrective here, we should make a new lower below here. It may not go that far. 250 is the sort of support area through here, so it can just be the A, the B, and the sort of squashed up sort of C in there. The bigger picture for this, however, is to the upside here, because all of this is corrective. So we've got a strong move up here, corrective here. So it's just a sort of softness in here before we see a push. It's just reacting from trading level 3 here, major level, and it's stuck in group 2 here, minor group 2, 65, 72, and the 80. That's why it's all sort of bunched up in there. But so yields down stock. So anyway, we're just sort of, once this gets above 272 here, back above here, then we know that that's going to be supportive for stock as well. But we're not there yet with it, and and it can get weaker through here. So there's two other elements to keep an eye on, as we sort of do in the background, but I'll start bringing them into the picture a little bit more, I guess. But the S&P 500 here, obviously yesterday we were looking, and before that we were looking for a move to 1900 and then having a corrective move, sell off at the 1900, and that's in play. The move down so far from the 1900 here is in 5 waves, so we should get a 5-wave structure here, 5, 3, and 5. So still looking for an A and a B and a C structure here. So we just got to kind of really wait that out and wait for this market to see if it climbs above the 1900. So pretty much a rally off these lows at 1888, back to supply at 1890, 1893, 1895 tops, and then a move down once again. I'm not sure if I've got that on. Yep, got that here. So look, the main point here, just on the sort of intraday here, is that you can count 5 waves down, the 1, 2, 3, and 4, and 5 here. So we should see a move back to this block of supply here, which will come in at the midpoint, the 1895 sort of area here, but it starts below that as well. So look, that's it really. 5 waves down, 3 waves back up, another 5 waves down here. It may end up being a flat correction. It depends on how far this goes. If this goes high here, then you'll have a shallow one here. If it just goes low here, then you'll know you'll have a move down here further. Okay, that's a bit sort of just sentiment sort of stuff. The DJ is the same as well. Just mapped it out here a little bit cleaner here, and looking for a flat correction on the 1600 here. So yeah, look, it's just really going according to plan. I didn't think it was going to move down this far, actually. I thought it would be a bit tighter than that, but those notes really pushed up. So anyway, we just got to sort of work with the pattern, and we're only in the first leg here. So the DAX held up better here in terms of its little pullback here that we were looking for. But look, while the DJ and S&P had, only in their first leg here, we better prepare ourselves for a more complicated wave 4 correction here. So something a bit more messy here as such. And, the other thing I need to point out too is that for this market, at least anyway, is that, if this wave count is correct, then we'll see a this wave 4 sort of finish here, get the first high above the level, and then we'll see a larger correction here. So pretty much a series of corrective patterns across here as such. So either keep the stop well out of the way or take the money off the table and come back on a sunny day. The Footsie's in the same boat as well. Look, you can basically see it's struggling into the 69 here. That was our target here. You know, will it get there? Is that it done and dusted there? You know, will this correct further with the other markets coming down through here? As such, you know, will we get something like this a little bit bigger here? I'm not quite sure, but I think it's probably a good idea to bring, you know, just for the sake of it, is to bring the stop up just under this particular low through here. And yeah, you know, we've had a good run with this, you know, all the way up. So, you know, it's not going to make much difference here. It's sort of just a 50-50 bet at this stage. But look, we'll just bring the stop up to there. We'll probably get stopped out, but I don't want to just take it at 72 here, not where it can possibly move up higher from here. And, you know, it's still in 70 in group 2 here. So anyway, stop up to that point there, but always read the text on the day ahead report, because that will have the actual numbers in there. The ASX 200, the sluggish little bugger, it's still not getting up on that 5.5. The volume here was strong. The volume coming down through here was on lower volume, so we can assume that that is corrective in nature, and the buyers are still sitting low in here. This move down here appears to be corrective, so that's a positive for this market to push up. However, we've always got to have all the counts that we can possibly find and have them on the table and look at them and sort through them, poke sticks at them, and then flick them off when they're not there. But the main one that's still here is that this move here in 3 waves here is, you know, can be counted as corrective, as an A wave, a B wave, and a C wave, and fail from there and move down in for like wave 1 here and wave 2 and move lower and get another larger correction. So this can be counted as 5 waves in terms of down for 1, yep, and then back for 2, then 1, 2, 3, 4, 5 for the 3rd wave, A, B, and C for the 4th, and down for the 5th. It can be counted like that. So this can be an A and a B and a C, pulling back to supply or 50-60% retracement level, and then folding over from there. So you need to be sort of on the ball here a little bit, you know. But for the time being, we'll just leave this as is here, and look at this as being up for 1 here and back for 2 here, and then looking for the 3rd wave up here. So in the 3rd wave up here, if that was going to be the case, we'd be looking at wave 1, wave 2 pulling back to the 61.8 retracement level, which is 54.60, and then wave 3, 4 and 5, something like that, moving through here. That would be sort of nice, and that would also be in line with what we sort of see in a lot of the stocks as well, that create this particular pattern for the ASX. But okay, just drilling in here a little bit is from the 5500 here, the move down through here appears to be corrective. It seems to have this move here. Well, first of all, this move here is in 3 waves, but this move up through here makes it in 3 waves as well. But the fact is they just sort of overlap. So in a bit of a way, it makes this like a sort of an A and a B and a C pulling back into the 50 or 60% retracement level here. The cash market's still trading up around the sort of 54.90 sort of area. The futures market is 54.88, so that's playing up here as well. It's just that this market is down. So it is a positive in terms that this can be viewed as corrective, and the futures are above the cash, above this CFD here. So look, Thursday is also a bear day in the bullish weekly cycle. Not that we've got a bullish market, by the way, either. So we need to be a bit sort of, you know, careful about how we interpret that. But Thursdays, we normally expect it to be sort of bearish. And if it is going to be bearish, we want to see it bearish on lower volume. So when we look at, if we look at the ASX here for a moment, sorry to sort of bore you to death, but just sort of, it is important in terms of So we had this nice volume here the other day, which we noted, and technically that's where you'd keep stops under the volume. Now this move down through here, that move down that was corrective, was on lower volume. So if we see Thursday, even though we may get a even though we may get a bear day here, as long as this volume here is lower than the previous day here, then we're kind of still safe there. Do you know what I mean? If we get increased volume over this bar here, and we get a move that's lower, especially below that 54.60, because that's the 61.8 retracement level from that low to that high there. So that would create a sort of a bearish thing there, and then I think that we need to look at being short. So keep it light, keep it flexible, and good luck. Cheers. Thank you.